What a beautiful morning. Good morning, everyone. Wherever you are in the world, good evening, good afternoon, good morning, great morning. I'm so glad that you're here. We're getting ready to kick off our session over here. This is Jordan with Conquer Trading and Investing, hanging out with the best people in the entire planet. And I'm so glad to be here with you all. All right, everyone, we're looking at Bitcoin trading at 44,100. We have a lot to cover. This is actually going to be an extremely useful session. Sit back, take your coffee, take a sip of coffee, take a sip of your matcha. Let's get going, everyone. Kimberly, great to be here. Thanks for the reminder yesterday, Kimberly, about sharing the love, spreading the love. A lot of people with super chats yesterday. Want to make sure that they're always and all covered. Everyone, let's get into it. What are we looking at, right? That's the question we're looking at. Bitcoin's up about 1%, giving up gains. We're looking at price so far in the daily price action, not making a higher high, not making a lower low. It's an inside bar so far, lots of indecision. We're looking at buyers and sellers coming to almost a little bit of an even level, trying to find out what is next. If you just go ahead and you look for the last inside bar, just to show you that usually after an inside, here you go. You have over here at an inflection point over here, you can see this bar, and then the following day, the inside bar, and then you have some resolution. Is that what we're getting ready to see? A big break, whether to the upside or downside next? Do we have any nasty surprises left in us? Is that surprise going to take us towards $38,000? We'll find out. You know, right now we're looking at approximately a 35% drawdown, completely within range, completely normal for the Bitcoin bull market cycle. Could we see something a little bit more excessive? And that would be like something like, 38,000, 41, 42%. That would be a big, big drawdown. That would shake out a lot of people. A lot of people have a lot of different opinions right now. We don't know who's right. We don't know who's wrong. At the end of the day, the market's going to show us soon enough, and we're all going to find out. A lot of people calling for much lower price levels. When I say much lower, in $20,000 to $30,000 range, and for a prolonged period of time. That would be a 50% drawdown during the bull market. That would mean that the 4-year cycle is completely broken. Okay, it's a possibility. We don't know what's going to happen. We don't have crystal balls. The question is whether or not is history going to repeat itself or at least rhyme, or are we seeing something completely different, right? If we jump down to the 2-hour, if you remember yesterday in the Discord, if you remember on Twitter, I pointed out that price was coming into this area of confluence. You could see the trend line, the horizontal, it's not horizontal, it's a sloping trend line. You could see over here the sharper trend lines that I put out. This was the inner, and then over here the outer. Now, we're waiting for a break of the outer trend line to say that we're resuming off the first repair, right? Since breaking above that inner trend line, what happened was we came into the outer, was rejected. I have to show you on the 2-hour. I know it's such a small time frame, but it gives a very clear precision of what's going on over there. Okay, you could see the rejection by the outer resistance, and then it was holding. The trend line was holding. Oh, I say that trend line. They're all trend lines. All right, hold on. I want to make sure everyone is on the same page as me. This lesser of a sloping line over here, this channel that we were watching over here, that was started holding until this morning around 9. What's going on, Jordy? What's going on over there? Let's find the flow. Let's get into it. We got so much to share, and I feel like my tempo's in a bit of a rush, but I'm in no rush. We got a lot to cover, and I want to make sure we get it right. By the way, if there's anyone that's just joining us right now, so glad that you're here. Good morning. Speaking of Walmart, I thought last night Pomp was that's not Pomp. I thought last night Pomp, was talking about, he said fireworks. Fireworks to me is like, yeah, this is a big thing going on over here. And I was like, yeah, Walmart has their earnings call in the morning, right? And then like people like, I don't know. I think that's what Pomp is hinting at. Everyone since is telling me it's about pizza. How is that fireworks? I don't know. I'm not dialed into what's going on over there with Anthony, but love the Elmo over there. We'll see what's happening. What we're seeing about, I think it was about an hour ago, you saw price all of a sudden rejected strong by the outer resistance, and you could see price right now coming in and testing right now that break of that inner trend line. That sharp trend line over here, the inner one, it's now testing it. We're going to find out if we fall back in, right? Or whether or not this holds and we come in for another test of the outer. We are consolidating right now between these sharp trend lines, waiting for either a breakout above or to fall back in. We're kind of in no man's land, and that's where we are right now, my friends. Let me zoom out over here, and let's keep going over there, jumping back to the daily. People are wondering what's going on. Some people are saying that perhaps we're seeing a mid-cycle top, that this cycle is going to be different. Some people calling it a double top. I don't see it yet. I'm open to everything. If people were looking at this and saying this is Wyckoff distribution, I see that a lot more than I see perhaps a double top. Now, the reason I don't think that that's the case, and I said that I think it was about 10 days ago, and then you saw Heath putting together a beautiful video really getting into details and why not. If you look at what's going on right over here, it's a very clear pattern. Now, it's not the first time that we've seen this occur. If you go back to last cycle over here, at the same exact point of cycle that we're at, the same exact pattern did occur. Now, at this particular time, right, it obviously didn't turn out to be any type of Wyckoff distribution pattern, right? This was just the shakeout leading to the massive move of wave one, wave two into the blow off top. Is that happening again, or is this time different? I don't know. There's Elmo right there. I don't know, but we're going to figure it out together. That's for sure. When I look at the past cycles, I don't see anything different yet to say to me that, look, the model's broken, that the 4-year cycle is broken, and that we're going into some type of prolonged bear market with mid-cycle, throughout the summer. What I'm actually seeing, and there's a slight difference, it's a 30-day difference. We'll talk about that a little further into the session of where the actual possible shakeout and V-shaped recovery is coming in. We're going to find out really soon whether that's the case or not, and whether we need to readjust or not. But when I look at the 4-year cycle so far, what I see so far is an average playing out of the past 2 cycles, almost to a T. Now, of course, there are slight differences, very slight differences, but overall, it's almost a carbon copy perfect match, right? Whether or not you see the difference in the first cycle where we had that really strong first wave, on the double wave cycle, you saw this long consolidation period around this time. Now, the most recent cycle, the 2016 cycle, saw less of a consolidation period. The gains were less during this cycle as well. So far during this current cycle, what we're seeing in a consolidation period, that's an average of the two, as are the gains so far to date. Now, I don't know whether or not this continues or the model breaks, but I do know that I'm not in the habit of calling tops or bottoms, that I'm looking for the sweet spot of the trade, and I'm not looking for a model to be broken until it proves itself to be broken. Now, there are some differences. There's a lot of symmetry. There are some differences. We're going to talk about that a little further in the episode over here, and we're at a critical point right now, right? Soon enough, we're going to know what the next move over here. And yes, if we do have some type of sharp correction to the upside soon, then we could kind of like take a step back, breathe easy, and say that, okay, we're back on point going forward with a lot more clarity. That clarity for me is kind of, we talked about the big cannonball into the lake. It kicked up a lot of mud, right? It kicked up, and we're waiting for everything to settle, and we continue to track price, waiting for everything to settle. Now, we have a lot of people within our own community with a lot of difference of opinions. And that's excellent because then we get to consult each other, work off each other. That's iron sharpens iron. If everyone agreed with each other, that could lead to some type of blindness. I like having my brother keep me in check. I like that a lot because at the end of the day, not only myself, but each and every one of us wants to be on the right side of the market. And that's what we do together. And we do it without ego. We have nothing to prove to anyone. We do it without ego. That's so important. That's crucial over there. By the way, if you're new here, welcome. And if you're not, welcome back. Getting ready over here to continue our session. And we're going to do that with some precision as we keep going over here. Right now, what are we looking at over here? You can see this is conquering the markets, always looking forward ahead of the herd. This is Carl. This is Carl over here. Big shout out, my brother, putting out some work over here. And he's saying, okay, well, if this is the bottom that we're putting in over here, and we are getting ready for a shakeout, I want to know what happened last cycle. We are tracking 2016 cycle pretty closely still, right? And what he's pointing out that last time to the cycle peak over here took about 48 days. You know, not only did it take 48 days, it was a massive melt your face off move. 174.69, 175% return in 48 days. Rip your face off, melt your face off. If that does happen again or happen to rhyme, right? What we're looking at over here is that approximately by the 3rd of July, right? Now, rough strokes, that's going off yesterday. We haven't bottomed yet. We haven't even made a higher high on the daily. Let me flip back over here because we're watching a couple. There we go. We broke that inner trend line. We broke that inner trend line you see over here. And that's why, right, it was asked on the, it was in the Discord. We definitely gave that clarity that the trigger here is a break. And this is the first repair of the outer trend line. That did not happen. It's been rejected as resistance. That keeps everyone safe. At the end of the day, that's what we're looking to do, is keep each other safe. And it's not only that. You have that as the first possible sign of a repair, the break of the outer trend line. And then you also have the daily time frame. We have still yet to make, in about 4 days, a higher high on the daily. Coming down into this drawdown over here, is it a safe? You're looking to be safe. You're not looking to be fully positioned in more. You're not looking to be fully, when we're talking right now though, I'm not talking about your core position, your core spot Bitcoin position. I hope you're holding strong. I am. I hope you are, right? Now, there's many different ways to look at the market, many different strategies within the strategy itself to trade the bull of all bulls. And I hope that you are diversified throughout. Or if you're not and you're just holding spot, I mean, this is strategy number 2. We have a 35% pullback right now. Adding over here this time of cycle, to me, seems like a really smart and good move, right? To me, you know, I'm here to talk it out, to show you what I see, and to help you form your own ideas and opinions so that you're able to go ahead and make your own decisions, right? You got to take responsibility, okay? We'll look at everything so that everything's covered and you're able to sit in there and be informed, all right? Now, a higher high in a daily time frame, right? That also is a safer signal that perhaps we're bottoming out. Every single pullback we've had, you could see it ends with a big up green bar. Waiting for that higher high than the previous daily price bar. That's a good signal, a safer signal that you could get into the market and that we might be looking for that recovery. Do not be in a rush. Patience. You saw that tweet. One word, patience. That's what's required right here, right now. Patience, waiting for the market to show us what's next over here. All right, let's keep going over here. So I was showing Carl's work over here and he's projecting out that, listen, if we see another 48 bars from the low, this date over here is a moving date from when we put that low in, right? He'll adjust, just giving us some type of symmetry to work off of as we are seeing to date. Everything continue to mirror each other with pretty strong position with one anomaly that we're going to talk about soon. We'll get into it. He's pointing out if that were to occur again, that we would be looking at approximately 48 days from now. If we had 175% gain, if we had a rip your face off, melt your face off move, we would be looking in this strong area, this strong trend line that he's put over here, right around there. It's pretty high. It's a, you know, when we start talking about what that price target, but that's situational awareness right there. If we find ourselves right now, roughly 50 days from now, trading at roughly $120,000, right? Then we have another situational awareness part. We'll keep tracking. Thank you, Carl, for putting this together. Very important and useful stuff over here. Ian also focused in, seeing the symmetry last cycle in this cycle, noticing that within this pattern that we're all watching, right? By the way, that's when we took out that low over there. This was March this cycle, right? Back in real time. He's noticing the symmetry that within 34 days, this over here, this trend line over here connecting the two with about an 18-degree angle. If you look what's happening over here, it's a different angle. It's sharper. Now, sharper down, sharper up, 27-degree angle over here, but he's noticing that it's taking so far about the same amount of days. Is this potentially right now around where we're putting in the bottom? We're watching out for it. We don't know. If we do see a sharp and quick recovery, we know that we have our bearings back correctly and we're right on time. Now, what has thrown off our bearings? That's the question over there. Everyone knows that roughly, you know, call it a few weeks ago, I'm like, you know, this is the shakeout. This is the bottom of the parabolic move. Get ready for a sharp V-shaped recovery and a rip your face off move. And then all of a sudden, we were starting to build out of it, and then bam, anomaly, smack down. What happened, right? Was it Elon's tweet that caused the anomaly? Was it an anomaly, or is something different this time? Has the 4-year cycle broken? What's going on over here? We had a nice tweet this morning. Let me find it for you, right? A nice tweet this morning over here. This is a big shout out to John K over in the EU. He's saying, will 2017 repeat itself, or at least it rhymes, pointing out the difference that we're seeing, you know, roughly 30 days later, this move happening over here, the shakeout leading to the possibly V recovery. Does this put out, you know, we have over here, we have Ted, we have Ian working on lining up the mid-cycle dips. How many days to the cycle peak? Does this change the game where we're now looking for October to be the peak of this bull cycle market, this bull cycle phase? You know, are we still looking towards the end of September? Are we looking earlier? Are we looking early? I have the chart over here. Let me find it for you really quick. Are we perhaps looking at this ending in August? I don't know. I continue to watch. I continue to monitor everything I can to help me keep my bearings, keep my situational awareness, and make sure that we're able to stay on the bull of all bulls over here. This was retweeted over here. You can find this in the timeline over there, pointing out the symmetry between past cycles, where we are, and the possible lag of approximately 30 days from where we are. That would be different. That's an anomaly. That would be very different over here, seeing the shakeout occur later. Or is this the model breaking in real time? Are we about to see the model break? Are we about to see price dump past, let's call it, the high $30,000? And is something different about to occur? And if that model does break, how are we going to react? How are we going to position ourselves? How are we going to protect ourselves? Look, if the model breaks, you could see right now we're preparing for it. We'll make sure we're there and we'll cover it. Right now, I don't see that happening. We're watching out for it. And if it does, again, we'll be there. Are we seeing something like I saw Raul pointed out, a descending wedge, pattern that's going to occur? Possibly. That's a bad look at it. Hold on, let me fix that for you. Let's get this a little bit neater over there. Let's just use this, rough strokes. Are we seeing something like that occur that's going to lead to a breakout over there? Something that we saw back over here in January? Possibly. I don't know. But what I do know is once we get past this first repair that we're in, right? As soon as that we break this outer trend line, and it's a moving piece. It's a moving piece. That doesn't sound right. It's a moving piece. Whatever the case may be, once we have the first repair, whatever that first repair may look like, we will be there, as you could see as we got close yesterday, as we came into this important area of a confluence of resistance. I put it in Discord. I tweeted it out. I let everyone know to watch what's happening. We broke above there, and that's still not hit the trigger. Still not hit the trigger. If we hit the trigger, right, the next thing that we're going to do, or that I'm going to do once we have the first repair, is I'm going to add that trend line over there, right? And I'm going to say, well, that's the last repair we need over there to say that we got this bullish momentum coming out of this again. You know, not yet, too soon, but we will be there when it happens. That's the line that matters, as always. That's the line that matters, unless you're looking for a possible breakdown, right? Unless you're looking for the model to break. Too soon for me. I have that line over there that we've put in, by the way, since March. And even when we broke 60,000, I kept pointing out that watch out. It doesn't look likely. It does not look likely, but 38,000, that still has to be a point of reference for you. It is possible. And I still mean, it's not likely. It's still possible. Are we going to see a 42% drawdown? Listen, it could happen. Be mentally prepared. I'm always preparing myself and you for what is happening. Do I think we're going to see a 50% drawdown? If we have a 50% drawdown, that would be highly unusual to occur. That would mean to me that the model's broken. But Jordan, we had a pi cycle cross. The pi cycle cross you said was erroneous. And look, the market has pulled back since. See that? The pi cycle nailed it, Jordan. Right? Now, it wasn't just me. After I said that, a few days later, the developer of the indicator, right, said that, listen, this is a false signal if it occurs as well. So you got two reference points. By the way, a little bit of awareness for you. Every time there's been a pi cycle cross, we haven't seen a 30% drawdown. We saw significant drawdowns, whether it was the peak of the second wave of the 2013 bull market, whether it was the peak of the 2017 bull market. In both cases, we saw an 84, 85% drawdown, or if it was the first wave. If it was the first wave of the 2013 bull market over here, you saw boom, 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 boom. Let me come back to the first wave. Here's our first wave right over here. This was the first pi cycle cross, and then you saw a massive drawdown of 80%. So if you're saying that you're seeing a pi cycle cross and that the indicator was correct and that I was wrong, that means you're expecting an 80, 85% drawdown over here mid-cycle, right? That this is a double wave. The only thing is that this over here, we did not see any type of euphoric blow off top. This is euphoric blow off top. This over here, this is just averaging the first and the second cycle almost to the T. Complete average, again, pointing out after that sharper increase in the first cycle over here, 2012 cycle, you saw that long, prolonged consolidation. In this last cycle, 2016 cycle, the one with the least amount of trajectory and return, you saw a consolidation, but it didn't last that long. In this current cycle, which so far has been an average of 2, we're seeing a consolidation period that is really just an average of the 2. Everything to me continues to look like that it's right on time. But let me tell you that I'm watching and looking for everything. We did not have the parabolic move going into the pi cycle cross. That's why I said it was erroneous. Now, if you're believing that was a pi cycle cross, everyone's always looking to take out the king, right? If you think that's a pi cycle cross, then you're expecting a significant drawdown over here. 35% drawdown, well within the means of what we're looking for. By the way, you can see over here the root putting out some work over here. And he's pointing out the drawdowns occurring at the mid-cycle dip. Those that have been right on time, you can see across the whole web, continue to like have that same like heartbeat, right? And he's pointing out over here, look, if you look at the 2017 cycle, we had a much bigger, not much bigger, a bigger than a 30% drawdown coming into that dip. If you go back into the 2013, it was a significant drawdown, right? Over here, we have just over a 30% drawdown. It's well within the norm, right? Zoom out a little bit, and you can see that everything is happening right on time. He noticed something over here. Let me pull it up over there. He says, once the final low is in, then we can draw a support line, right? That's pretty important over there when we talk about Brad's model over here. Once we know that the low has been put in, Once we have the recovery, then we could go ahead, or Brad could go ahead rather, he could adjust the angle with that certainty. We know for future cycles going forward, it's after the mid-cycle dip and it's after the recovery that it publicly could be drawn in and shared with everyone. And that is the safe time to do it. You could see that we continue to work and do our best to make sure that we stay on the bull of all bulls. Let me pause here, drop some head snack as it's Taco Tuesday. It is Taco Tuesday. Now I saw someone saying, listen, I'm not having any tacos over here till we get back on track. I'm eating some ramen. You know, we don't have a ramen noodles, theme song to play. If we did, I would play it. I hear you. I feel you. That's all good in the hood. But let's go ahead and drop some head snack.
Markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing, just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room, grab the bull by the horns and to the moon. Flow from the plateau, make the play. Boom, boom, it's a taco day.
It's a taco day. It's a taco day.
All right, a couple of things to talk about. A couple of things have come up. So, listen, first of all, I'm so sorry for even highlighting this. This is a family channel. There's no question about that. I know that a lot of you watch this with your children working together. We have father-son teams. We have husband and wife teams with their children, right? My kids will be watching these videos in their future to get their financial education. So I do apologize, heads up for this in advance. If anyone's watching that probably shouldn't be, right? We have over here Montana of the 300. This isn't quoting me. This isn't Wyckoff distribution. Jordan, you are off your head. And then whatever, I won't even repeat or say. Listen, first and only warning. If you want to join the conversation and add something of value, then do it in a mature way. Otherwise, first and only warning, this is not for you. You will not be privy to what is shared here. What is shared here, you will not be privy to it. Listen, have your own opinion, follow your own opinion, but listen, that all that means is at this particular time, right over here in 2016, you thought this was Wyckoff distribution and you got your face melted off of. That's all it is, my friend. Watch your language. Careful, careful, careful. Now we have some other people putting out some really important stuff over there. Jordan, at what point would you start becoming bearish? A lot of people over here are really feeling pretty bearish right now. They're a little bit shook over here. The consolidation has really gotten to them and they're weary. I get it. I understand. It makes a lot of sense. I feel you, right? Listen, you could see by the earlier part of the presentation, I'm telling you, listen, I'm consulting all different views and opinions. Now, that doesn't mean that when I look at the chart over here, let me pull it up for you a second, that I see like, okay, well, that's a head and shoulders. Well, no, it's not a head and shoulders. I'm a technician and I'm looking at 4 peaks, right? I'm not looking at 3 peaks. Well, that's not a head and shoulders, okay? So I'm not going to, and if you're targeting, 28,000 because you believe that's a head and shoulders, well, good luck. Maybe you'll be right. And if you're right, then you could come back and you could be like, I got you, Jordan. You were wrong. That's all good. You could do that, right? Now, is this Wyckoff distribution? Well, you know what? Maybe if I had no idea of the 4-year cycle, maybe if I was trying to call tops, maybe if I wasn't familiar with on-chain analytics and seeing how bullish everything is then maybe I might be prone to think that, right? But we do have a bit of a cheat sheet. We have the roadmap over here. And until the roadmap breaks, I'm not looking to call the top. When will that time be? I don't know yet. I do know that I'm here each and every day with you, looking at the markets with an open mind, without ego, making sure that I continue to be on the right side of the trade. And when something changes, that I have to say, well, now it's time for me to exit my core position. It will still be a massive profit. I want to get back when it's time. If it's time at any time to get on the sidelines and wait for the water to clear to such a degree that it warrants exiting a core position, you're going to see a big headline. Jordan is exiting the market. I'm going to make sure that each and every one of you know. But if you're putting in, or if you're looking for that to happen while everything is lining up, I can't do that for you. That's not what I am doing. I need to do everything that I continue to do to make sure that I am on the right side of the market. And that doesn't mean going ahead and providing some type of analyst that's going to help support you in your own view. Okay. Now, granted, back over here, there was a lot going on when the model broke to the downside over here. We didn't exit, or I didn't exit my position. I added to my position, right? Right over here, whether or not you want to say that this was because of a tweet by Elon or not, it could be it's an anomaly, right? If Elon didn't tweet over here, would this have been a V? I don't know. I honestly don't know. We're going to see and continue to monitor and make sure that we're on top of it and what goes on. There was something else I saw, right? So there you go. Steve, that's also answering your question. If the model breaks, how do you navigate your core position? Steve, you know that I'm here each and every day. You know that I'm here each and every day to conquer the markets. And if and when that does occur, depending on the circumstances, we're going to be there to talk it out and make sure that we're all be able to have the information we need. By the way, if you're watching this right now, could you go ahead and smash the like button and support the channel and my work? Would definitely appreciate that very, very, very much. If you stand for family, go ahead and smash that like button. All right. So what else are we looking at? There was another comment over here. The market is more mature, 100%. The market is definitely, and especially, Ian and Alan P have been very on point talking about the maturity of the Ethereum market and how that's leading to a different cycle compared to Ethereum's 2016 cycle. Very important stuff over there. There's no question about that. The Bitcoin market is now a $1 trillion, well, it was last week, a $1 trillion market. Significantly more mature than it was. Not only that, you're seeing big players enter the space. When I say big players, we're not talking about, MicroStrategy and Tesla and public companies. By the way, of note, have you noticed it's been a while since MicroStrategy's conference? I believe it was in February. Its corporate conference in order to help corporations get Bitcoin on their balance sheets. Really, as far as I understand, Tesla was the only one that responded, right? We have not seen any other major corporation make any type of announcement. People wonder, do we need that type of announcement to get out of this current consolidation funk? Listen, I don't know, but it is true. It's been more than a minute since we've seen a major announcement by a corporation, right? Whether or not we're going to see another one soon or not, listen, I don't have a crystal ball. I don't know, but I do know that major players, and I'm now we're not talking about little corp, BlackRock. People make. Have you seen, if you've been around in the 2017 bull market phase and you understand what coordinated FUD through the news cycle looks like, you're very aware of when it's coordinated, right? Did you see last week or a few days ago, we saw something about China banning cryptocurrency again? You understand what it looks like. Big players are playing big games, right? It was William, right? William put out yesterday a tweet. I don't have it up here to pull up with you. It was very important. So maybe we'll look at it tomorrow. I suggest you look at it on your own. And he was talking about the fact that you saw a lot of, first of all, big players. This is on-chain analytics, positioning in ahead of time. I could raise my hand. I'm in that group. And then you saw a lot of retail this portion of cycle exiting early and first, right? You got to ask yourself, who's on the right side of the trade? We'll look at that tomorrow, perhaps. That was an important thing over there. Let me jump back into real time and keep going over here with y'all. By the way, before we even got live today, I was just so grateful for all of you and everything we share and how we work together. I love that people, smart people, have differences of opinion than myself. It helps keep me in check. It helps me make sure that I'm in line. That's why this group was formed and created in the first place, right? It's absolutely beautiful, and I'm grateful for it. I just want you all to know that. Thank you, Joseph. Thank you, Joseph. This is not only that. My cat eats everything. It's not only that. My boy, Giles, you all know him at, that's like me calling Alan Wu, right? Giles, which is Giles, man, you got to love it. It's got to put a smile on your face. What's that? I didn't see that, Philip. I saw a couple of days ago, MicroStrategy announced that they had bought another $15 million worth of Bitcoin at an average price of $55,300. Michael Saylor, again, continues to dollar cost average this portion of the cycle, adding at an average price of $43,000. Thank you for sharing that over there. All right, let's keep going over there as I take a breath. I needed to catch up on a couple of comments that you guys are sharing. Come on. This is what we do, and this is what we've been answered since we got on together. Eduardo, it is absolutely fantastic to see, and it just keeps on increasing. The level over here of awareness keeps on increasing, which brings me back to this over here. Ian's talking about, right now where we are at this moment. By the way, this is clarity with not having clarity, right? So we're just waiting for price to move up to confirm all is good. By the way, the title of this video comes from this message over here. We're just waiting for price to move up to confirm all is good. What he means is with the model, with the 4-year cycle. And to see that we don't have any nasty surprises left. Yes, it's still possible we have a nasty surprise. It's still possible we test 40,000, break that light teeny support and come into 38,000, which I said since March and throughout March. And then even when we were up here, I said, watch out. 38,000 seems to be the stronger support. If we were to test that 40,000 area, it's pretty light. 38,000 completely in play. Let's see. That would be a nasty surprise, an event. It could happen. Be prepared, right? So he goes on to say, listen, going forward, we need to think about how to weight the importance of the key data points. For example, the halving. Are we lining up the 4-year cycle off the halving? Or is it the break of the all-time high? Or is it the mid-cycle dip? Or will it be, depending on where we at in the cycle, where we're lining it up from? At the beginning, going into after the halving, do we start at the first phase over here, lining everything up until we make the all-time high using the halving? And then when we make the all-time high, the new all-time high of the previous cycle, do we then adjust and line things up, line all the cycles up off the new all-time high? And then we continue that until we have the mid-cycle dip. And then at the mid-cycle dip, do we adjust and line off from the low of the mid-cycle dip, knowing that approximately 150 days to the cycle peak from there, right? And then even further, do we wait for the bottom of the second wave right before the rocket ship, line everything up again, knowing that in the first 2 cycles, it was exactly 35 days to that blow off top, and we just won't exit on 35 days. We have we have price action experts here, right? I know that regardless of what's happening, I'm looking for ultimately my ultimate indicator, price and price alone, to tell me when I'm getting out, and that's what I'm watching over there. Amazing stuff. This awareness over here, we might have the worst thumbnails on the entire web when it comes to our YouTube videos. It might not create a lot of views. I don't care about the views. And I don't care about telling someone if they can't get into step of the essence of the group over here, that this is not for you. If you have a problem spreading FUD, if you have a problem watching your language, I'll tell you, because for me, it's only about quality. And look at the quality we have over here, right? So he goes on to say, you know, the dip before the blow off top. I didn't even know that. Do you see that? I was just saying, or is it the rocket ship before the blow off top? Ian right there as well saying, or the dip before the blow off top, the blow off top. Then how much weight do we give to the 2012 cycle compared to the 2016 cycle? And finally, some wiggle room on the chart for price to track within. This right over here, my friends, is enormous signal. Ian, thank you continuing to just contribute so wildly. And when I say Ian, it's not only Ian, right? It's everyone working together. It's everyone working together, and it's enormous, right? So now you're looking over here at, this is the halving tracker, right? Putting together and bringing everyone's attention and just pointing out, and you can see the confluence of experts thinking that, listen, if this is right here, the bottom of the shakeout, and then you were to use the 2016 performance from here, from that cycle, from that point, look where he's exactly where we are. He's pointing out that if we were to see 2016 trajectory continue, we're looking at price of $400,000 Bitcoin. People are still wondering, are we still looking at $300,000 Bitcoin, right? I personally feel very strongly that as we come out of here, why there's going to be a couple of points of the cycle where all the performance of all three cycles are kind of, you know, squared back at zero, that this current cycle is going to continue to be an average of the first and second cycle of the 2012 and 2016 cycle. I think that we end up higher than the 2016 performance. We will see a lot of people jumping on diminishing returns right now. We're not talking about a long time to find out who's right, right? We're not talking about a long time to see who's right. Listen, what else are we looking at over here? Let's see. I think we have something else to share. We might not, and that's okay if we don't. By the way, I'm still watching everything. This could possibly lead to a shorter cycle. I've pointed this out for you a couple of times. The reason reining it in my own brain, right? I only want to be right. I only want to be correct. I don't care if it was my thesis that played out correctly. I need to be on the right side of the trade as quick as possible. Is it possible that we peak in August? Anything's possible. It's the markets. Going to make sure we do, and I do, whatever's necessary to be on the right side of the trade. And there we are, my friends. Let's take a look at some other stuff now. Let's take a look at the markets, right? 859 likes. We must have like 1,200 people in here today. We have 2,000 people in here today. Could you go ahead, show some love, smash, if you're watching this on the replay, could you help this crowd out? Could you smash the like button, get us going over here? All right, bought in at 60K. Bull run was freaking out until I found this channel. Thanks so much, Richard. I'm glad you're here. It is good. Thank you for being here. I'm so glad that you are here. That's what we do over here. That's what you got a couple of people over here smashing that thumbs down. If you already smashed the thumbs up and you want to smash the thumbs down to spread and show some love, I'm good with that as well. You could do that. It's all good. It all helps the algorithm. And that's what we're doing, is looking to support each other. All right, let's keep going over here. Right, Danielle? That's the easy way, right? Wake me up as we get towards the rocket ship move, right before the parabolic move. Yvette, thank you for your continued support. Thank you for your continued support. It would be interesting to see, by the way, right? If you've heard the golden ratio, right? We look at it this way over here, right? Where the bear market, from the low of the bear market to the cycle halving, is approximately 51% of the move, and the bull market 49%. You could count the amount of days, approximately less 2%. If this cycle does not have that symmetry, that is extremely interesting to me. That's extremely interesting. Whether or not we peak out earlier in August, or if we peak out later in October, if we would see a break of this, that is interesting. That is different. Watching out for everything, always keeping that situational awareness is what we do to keep on the right side. All right, let's take a look across some markets over here. Before we do that, let me jump down to the 2 hour. Let me go ahead and clean up some of my coach artwork over here, and then make sure that I see where we are, right? And I could see that we are just waiting to see if we get that break of that first repair. It's that outer trend line. We'll continue to monitor. We'll continue to monitor. That's what keeps you safe. That's what if you saw or if you entered too soon, you got to work on patience. You really do. You got to work on patience. All right. What are we doing? Let's see. Let's start with the S&P 500. Let me jump over to the, I'm going to do it on the daily, right? Okay. So what are we looking at so far? The strong recovery, right? The market's crashing. The market's crashing. Wait, here's our line of resistance. Here's our trend line. That should be support. The support held. We're back up into this area. Completely neutral. Completely neutral. I'm trying to get there we go. Completely neutral. Not much else to say or share. A break of this trend line to the downside, then we would be looking for a sharper and steeper correction. Okay, that's not happening right now. We're kind of on autopilot, and they're not interesting. The only thing that's interesting right now is gold and silver, right? And I can say that as being like everyone here on this channel who puts in the work each and every day. We were tracking it throughout all the consolidation until the trigger point arrived, and then we were right on time, right? We were right on time. Nasdaq. Let's take a look over here. Now, look at this. This is interesting. What's interesting about it, let me jump down to the 8-hour over here, right? Don't worry about them, my brother. Do not even worry about them. But many are called, few are chosen, right? Many are called, few. There are many people out there for whatever reason that are not able to adjust their time preference to drown out that noise. It's for many different reasons. It doesn't even matter. What's important is that you see it. What's important that you see it. Okay, here we're looking at over there. What we're looking at, that's interesting, right? Kip's pointing out that grains have soared. What I've noticed is we've seen a lot of commodities as China pulled away liquidity. All of a sudden we saw a lot of commodities come sharply off. Interesting that food prices are rising. Thank you for pointing that out. What's interesting over here, right? After we had that first aggressive repair break, pointing it out for those that wanted to jump in aggressively. And as we pointed out the signal, pointed in where you get out, to watch yourself. That's a very aggressive move over there. You can see that we've come into that horizontal resistance over here. And it's also a confluence of the final repair over there at the Nasdaq. A break above this, that is a buy signal. That's a clear buy signal. Watch out for it as we're now holding and respecting the horizontal resistance. And now today, not yesterday, respecting the trend line resistance as well. Very interesting over there. The dollar, well, this is also very interesting, right? I wish I closed all my trading view charts. I want to stop having all these corrections. And then look, we've resumed off. This was broad strokes, my friends. This was the bear flag, right? This was a fake out to the upside. Had to position myself for it. Got myself back positioned correctly when it was appropriate time on the breakdown, right? Since then, we broke down out of the bear flag. We came in for the retest, and now are resuming off of it. Very bearish on the dollar over here. Is that going to be supportive of Bitcoin, right? And then watch what happens over here. The next thing we're looking at is the 12-month low. We have the support at 89.43. Breaking that opens up an interesting event, as then we're looking at the February 2018 low at 88.40. If that breaks, we're going to see a really sharp move against the dollar here in 2021. Watch out for it. We've been lining this up. If you want to have some fun, go back to the January 5th video that we put out. DXY is in the title. Right, at that point, price was breaking down outside of this channel, right? I told you, watch out for a retest and then a resumption down. It's occurring now. What else are we looking at? The metals, right? We're looking at gold getting above. See, you guys saw me do this 100 times. Why is an average of the two cycles in your opinion? Well, third eye drops. What a name. Love the avatar. That looks like Snowden a little bit. Third eye drops. Did you see Snowden put out some type of interview the other day? And he was talking about that out of all his crypto positions, he's most heavily positioned into Bitcoin. It's the core of his portfolio. And at the same time, he's hypercritical of Bitcoin. What a beautiful open position to have, right? You cannot get so tied up in your position that you're blind to everything. You want to be pointing out the floors in order to improve it. Beautiful stuff over there by Snowden. What we're seeing over here on gold, it's now breaking above the horizontal resistance at 1865. And okay, we had a break above it. Here we come into real time. A break above it coming in for the retest now. A resumption off of over here. That is taking us at that point then, well, I'll just say higher. We'll just say higher. This is where it became interesting for us after we broke above the trend line, came in for the retest, and finally resuming above it, right? At this point, it's just holding and pushing positions. It was shared on Twitter yesterday. It was a beautiful tweet. The page and remnants of a stock operator that I quote so much. And it talks about the great Livermore talking about that he made the most money sitting on his hands, doing nothing, pushing his trades. People get into a small amount of profit and they're in such a rush to take that profit. Very important over there. Interesting, the double bottom that occurred over there. Now that's a double bottom and it's very clear, right? It's a question for the community, right? Is it could we be looking at a double top on Bitcoin over here? I don't see it. I don't see any symmetry between a double top. So, it's hard for me to, I don't know, if someone sees a double top there, I would like to know. I only want to be right. Let me know. Put in a yes in the comments, and I'll look for that. That's all. What else are we looking at? Let's keep going over here. Let's see what's going on in the markets. Did you see Ethereum leading yesterday as Bitcoin was bouncing? I did. What's interesting about that is two things, right? That goes back to Alan and Ian's thesis and work that we're looking at a much more mature Ethereum this cycle, that you're seeing it track more closely the heartbeat of Bitcoin, the ups and downs of Bitcoin, definitely leading Bitcoin. We were very early about that Ethereum leads, that Ethereum would outperform Bitcoin during the bull market. What's interesting that in the last cycle, in 2016 cycle, at this particular time, in 2017 during the bull market phase, when Bitcoin broke out of the pullback right here, the shakeout, the mid-cycle shakeout, from this point on, Bitcoin went on to lead for 4 months and Ethereum consolidated. The question right now that I'm asking that everyone, I saw that. If you look at the March, right? If you look at the March, if you look at or I should say February, right? You can see where my mouse is right there. But from my understanding, from my understanding, again, everything that I know, I kind of taught myself, so I don't know. That's not what a double top looks like to me. If I'm wrong, I want to understand for real. I'm completely open to whatever is, either which way. Back to what I was looking at or talking about on Ethereum. At this particular point in cycle, you saw Ethereum consolidate for 4 months while Bitcoin ran for 4 months. It was the valley of alt season, right? Or are we going to see Ethereum in a much more mature cycle continue tracking the price of Bitcoin and leading it? That would be a glaring difference. It's very important because it gives us an edge going into the next cycle of what we expect to occur. So we'll continue making that observation and watching it. Boom, 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 boom. That's right. Heath and Brandon drop an absolute gas pack on the regular. This community is the bomb. I love it. I absolutely love it. I cannot give enough credit to the work that Heath and Brandon do. Keith on Trade Talk, Brandon on Crypto Trades and Tech. You could find them from my YouTube channel. If you go to the main page and you go to the featured channels, you'll see both of them. You should be following their work. Absolute assets. Love them. All right. What else are we looking at? Thank you, Christian. Boom, 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 boom. What do I think about the hash ribbon indicator? I don't know. I don't follow it. You know that, Christian. If you've been following my work for a year, you know that I don't consult it. And you know what I consult, but the reason I consult and do what I do is because it's what has kept me on the right side of the market. It's what has led to that accuracy that we've been putting out. I'm looking over at this chart over here though, really quick, and I could see a clear trend line. You see that? All right, let me be exact. Let me be exact with the trend line precision. Let's take a look at it. All right, let me try to be forgiven. Let me try to be really forgiven. All right, so where's that number we're looking at if we peek down into that trend line, right? Is it right around that $38,000 zone that we've been calling out, giving ourselves as max pain level? Watch out for it. It could happen. It could happen again until we see the first sign of repair. First sign of repair being a break of this outer trend line over here. We were just rejected about 2 hours ago from it this morning. A breakout above that, that's the first sign of repair. And then the safer sign is going to be over here on the daily, making a higher high whenever that occurs. Still under pressure. Have that patience. Learn to attack like a predator. Heath put out that meme yesterday of the predator, and that's how we are, with the invisibility cloak. Love it all. All right, what else are we looking at over here? Let me, boom, boom, boom. There you go. All right, now I feel good. This is enjoyable. Kip's wisdom. I missed it for real. Less is more. Use a simple strategy, right? There it is right there. All right, what else are we looking at? I missed it. I really did. All right. Of course, I'm talking about a major public company buying in, right? Silver, we could have I didn't get to silver yet. We could have a quick look at it over here. And then, listen, we're on autopilot. We're on autopilot. By the way, also there was that session before the breakout, before we looked at the entries, I was talking about watch for the symmetry. And I showed you, look how we came into it. I'm expecting for us to come out of it like that. And look at that almost perfect symmetry right there, right now. It is an art. I think anyone that is in love with their work is an artist, right? And that's my definition over there. Listen, signal out the noise, right? We're pushing this right now. The only indication that it would be time to take some profits would be a break of this trend line. That's why we drew in this trend line over here. That would be the only indication that something's not right, and that perhaps from there we either go sideways or come back down and test the major support. Right now, this trade is on autopilot, not only looking to take out the yearly high, looking over there to take out the big resistance a little above at 30.70, and then hopefully targeting, the all-time high at $50 and then pushing above. That was the plan. We were waiting for it, and it was not easy. There were a couple of times we took an entry, right? There were a couple of times we took an entry. Here was one, I believe. Here was probably another. Here was definitely another, and none of these have panned out. It's been a long consolidation, a long, grueling consolidation. But if you remember, or if you look at this long, grueling consolidation, what happens? Expansion, right? Expansion, consolidation, leading to further expansion, right? Yeah, or we could break down, of course, right? But when we say expansion, that is volatility to the upside or the downside. Markets consolidate, expand, consolidate, expand. It's the heartbeat of the markets. All right, what else are we doing today? What else are we looking at over here? Bitcoin now, red on the day, giving up gains of about 4%, now going down 1%, right? Again, I just want to check out whether or not we still have an inside bar or have since. I got to clean this up. I really got to clean that up really quick so we go forward and we got it. Are we still looking at an inside day on the daily of Bitcoin, or have we broken down to the downside? Still an inside day so far. Still an inside day so far. All right, we have over 1,000 likes pretty early in the session. Oh no, we've been over an hour. Everyone, Thanks for spending the time together today. I'm going to play some honeymoon instrumental and then see if we come back to share anything else. When I talk about people who contribute and give so much, I have to highlight Tom. Tom, thank you so much for always adding so much of your wisdom, so much of your insight, supporting everyone. You are a gem. Thank you, Tom, so much. Here it's meme. Here it's meme, JN. It's meme all day long. That's what I thought, Barry, but I'm not sure. Oh, this is a good one. This is a really good one. The reason I say that, this is the same comment my little brother made to me when I first of all, can you imagine calling him up, right? Let me point over here. Calling him up over here as Bitcoin broke out to the bull market, right? And being like, brother, this is your last chance to position in. This is the time over here. Bitcoin just broke out to the bull market. He's like, come on, you can't look at charts and know where price is going. The same Joseph, you and my brother are on this exact same page. Guess what? My brother never listened. My brother's very salty right now. He's very salty as Bitcoin's trading at $43,000 because he's wishing he got in, But again, if you don't think that charts could help you figure out where price is going or how to react. I mean, MIT has done a study on technical analysis. Those guys, their conclusion of their study is different from what you say. So there's that. Or there's like, well, I've been doing this for 20 plus years. And guess what? My wife and 5, soon to be 6 kids have a pretty good life. So it's up to you, Joseph. But listen, don't mislead people with these thoughts that anyway. There was something else over here that was really beautiful. Let me see if I could find it over there. It was a question about the miners and whether or not a few miners are able to control the price of Bitcoin. I mean, listen, let's just think that out really quick. We were talking about, keep it simple, right? Is it Malcolm's razor? The most simple conclusion is usually correct. If you were a Bitcoin miner, right, and you could control the price, what would you do to the price of Bitcoin, right? I mean, come on, would you not moon it all day long? Or if you could control the price of Bitcoin, is it not going up? Laura, the price is going up forever, right? Think about it. So listen, I don't consult any of that at all. It's not relevant to me. What I follow and what has given me the greatest edge is price and price alone. I talked about there are some experts out there who follow on-chain analytics. If you're interested in it, follow them. That's not my forte. My forte is obviously the psychological behavior of people within the markets and price alone, trading price off the market structure of support and resistance with the help of trend lines and chart patterns. Everyone, good session. We covered a lot and it was very important. Very important session over here today. People want to know, for some people, important session would be like, well, where's price going to be tomorrow? That's not what we do or who we are. Anyway, everyone, thank you for the time. Thank you for the session. There we go. This is signal right there, and that's what we're seeing right now, though. We are seeing, if you look at on-chain analytics, you're seeing a lot of new short-term buyers selling. You're seeing a lot of larger wallets accumulating Bitcoin, continue to accumulate. You're giving away your Bitcoin to someone who's got stronger hands and smarter hands. That's my opinion. If the market or model breaks, we will look at it. Someone was asking, why are we seeing this current cycle as an average between the previous two cycles? I don't know how to answer that. Well, why not? Wouldn't it make sense that we see an average? I don't know. I don't know how to answer that at all. It is just what it is. And what it is so far is that to date, we're seeing this current cycle as an average of the two. Could that change? Yes, at any time. At any time, we could outperform the first cycle. That would be a super cycle to the upside. If we were to break above the expected range of the first cycle, that would be a super cycle to the upside, right? And or if instead of peaking when we're supposed to peak, we just continue to move out further and further, that would be a super cycle. Or if our drawdown during the bear market was less than 80-85%, that would be a super cycle, right? We're not seeing so far, and to date, we're seeing everything play out or rhyming pretty close to, history repeating itself. Don't look for the market bottom. Don't look for the market top, right? Now, I say that with the difference here, the difference why I don't think this is Wyckoff distribution. We looked at 2006-17 bull market. You would have thought that was Wyckoff distribution as well. It's the same exact pattern playing out. And the reason why we could pick the bottom after the capitulation, this is just an asterisk caveat when I say don't pick the market bottom. We're going to be positioning in at the cycle bottom. The only difference is with Bitcoin, with programmable money, we have a cheat sheet that continues to play out until it doesn't anymore. All models are meant to be a guide. I'm following the guide until the guide's no longer relevant. And in my opinion, when the guide is no longer relevant, it's going to be because the model broke to the upside, because we have entered some type of hyper Bitcoinization. And that could be as a result of the dollar, continuing to be devalued at an accelerating, alarming rate. It could be because of the increase of M1 and Bitcoin tracking that better than anything. Thank you, George, putting out that beautiful work in the macro channel. All right, everyone. I think that's it for today. We came, we saw, we conquered. Everyone, have a beautiful day. So the rock, that's good. By the way, this is a good one to highlight. Let me highlight the rock over here. That guy doesn't look relevant at all anymore, right? In my own opinion. And what I'm loving about this current environment that we're seeing in the market right now is just before, if you remember recently, whether it was 3 weeks ago, 4, everyone here thought that every single person on the internet saw the market as we saw it, seeing the matrix. And they're like, everyone sees it. And now it's completely clear that even if you're looking at, the space is so small. Very few people in the world own Bitcoin. And out of the people that do, and out of the people that focus in on it, very few see it the same way. Very few see it the same way. That to me signals that we're still very early. I love seeing people calling the top of the bull market over here mid-cycle. And then I look at the people that I've seen that have been correct, right? And every single one of them, right? It doesn't matter who it is, right? Whether or not it's Plan B, whether or not it's Willy Woo, whether or not it's whoever, I gotta get his name right. The kid. I don't want to even call him the kid because I don't want to age him. But working with Anthony Pompilano, William, putting out that beautiful on-chain analytics, really putting out some valuable content on Twitter. Every single one, Alan AU, I got to call it brother, seeing everything on chain pointing that we are completely mid-cycle right over here. It helps me confirm our own bias that we are mid-cycle, that we are early, because everyone else here, it's gotten to them. The consolidation has gotten to them. By the way, pointing out again, this consolidation is nothing more than an average of the first cycle and second cycle, as price here, this cycle continues to be an average of the two. All right, everyone, there it is. A big shout out. I've retweeted his tweets. I've helped build him up because I built him up like by supporting him, by putting out positive comments towards him, because I really believe that youth is king, right? I really believe that you always have to look to the youth to see where the future is and where it's going. It's very important. Very important. All right, everyone. All right, everyone. Thank you for the time together. Thank you for spending your time with me. And we're gonna do it again tomorrow. Have a beautiful day, everyone. I'll see you all in the Discord. I'll see you all on the inside, and we'll take it from there. If you're listening, Ted, Ian, I'm gonna catch up over there. Brandon on the channel, making sure we're working out what needs to be worked out for everyone else. We're gonna get to work right now. Have a beautiful day, everyone. I'll talk to you soon. Giles, out of love, but Giles, man. Giles, thank you so much. A big shout out and thank you to everyone that makes up Conquering the Markets. And that's everyone, whether you're silent or not, that is here each and every day putting in the work. There are so many of you. Tom in Seattle, completely supportive. Miguel, always such a bright light, supportive. Shane, Greg, Gene, there he is right there, right on time. Everyone, have a beautiful day. I'll talk to you soon.